Hello traders, in this video I'm going to give you an overview of the Accumulation Distribution Indicator. This is an indicator that is available for free on most trading platforms. Here I'm using the MetaTrader 4 MT4 platform, which does have the indicator built in. So I'm just using it here, as you can see, with the default settings. Okay. Basically, this is my interpretation of the indicator based on years of research, experience, and testing. And the way that I like to implement this particular indicator into my trading is to look for trends. Okay, so the indicator can show you if the market is trending or ranging and in which direction it is moving in the case of a trending market. So let's see some examples on the chart. Like I said, I'm not going to overcomplicate things. This is just my way to interpret the indicator and the signals that it gives, and it works for me. So first thing I'm going to do, this is a 1 hour dollar yen chart. I'm going to mark off resistance here. So I can see price has rejected this level and it's starting to fall here. You can draw trend lines if you like, although you can just look at the chart and see clearly it's falling. So the accumulation distribution indicator is displayed below here. And as you can see, that is basically showing us the same thing as the chart is, that the price is moving downwards. Okay, so it's making lower highs. Okay, see from the divergence, lower highs. Price is clearly in a downtrend. So we've established from price moving away from resistance, a trend line, and the accumulation distribution indicator that price is moving downwards. So now it's just a matter of timing our entries. Okay, so you can time your entry based on price action. In the case of this downtrend, a breakout of a support level. You can use the accumulation distribution indicator when price comes in the higher areas. It might be a time to look to get in and pull back on the trend, or you can use other indicators, which we will look at shortly. So let's start with a support breakout entry. So support level there. Okay, we see the price is falling down, as is the accumulation distribution indicator. Maybe we wouldn't have taken this one because we'd be just here waiting for it all to unfold. But we can see this support level here eventually was breached and then became resistance. Okay. So rejected, 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 and this would have been a clear indication, okay, we do have a strong resistance level there. Now perhaps we can look to take the short trade, the accumulation distribution showing us that the momentum is in downward trajectory, and we could have had a nice sell entry there for over 400 pips. Not bad at all. Good thing about this is, had we used this support come resistance line as our entry point, we could have placed the stop loss on the other side and it would have been relatively tight, around 15 pips, which gives us a really good risk to reward ratio on this particular trade. As you can see, as we come down here, the accumulation distribution indicator starts to slow down, which would have been a sign perhaps it's time to exit the trade. The trend is losing some momentum perhaps, and so we could have used that. As you see, it did continue down a little bit longer, but with all this consolidation, start to see some divergence to the upside there. The signs were there that perhaps you might want to be looking to exit this particular position. So yeah, that's one way to use the accumulation distribution for a short trade. Another way, if we use another indicator, let's say the stochastics. So with the stochastic oscillator, you are looking to sell when price is here in the overbought zone, in or around this zone, and looking to buy when price is in this oversold zone here. Okay, and also when there's a cross of the main line and the signal line in the direction that you are trading. So cross downwards here suggests a potential sell entry. It's near the overbought zone. So if we just mark that one off there, and that coincides nicely with our entry we're looking to take on the reversal away from the support here and here, becoming resistance. So that's just additional confirmation along with the candlestick patterns as well. Always keep an eye out for them. We have a good area for our stop loss, which is going to be a relatively tight stop loss. And as the trade continued moving downwards, we could have moved our stop loss with it. You know, say the price was here, you might have moved to the latest resistance. Price was here, move the stop loss to this resistance, which allows you to lock in some profits, even take some off the table if you want, and let the rest run. Okay. You may be thinking, well, the stochastic here crossed below in the oversold zone. It crossed the main line, crossed the signal line. That's a buy signal. Well, if you were just trading the stochastics blindly, yeah, you could argue it would be. However, this is why it's important to combine indicators with either other indicators, and most importantly, in my opinion, price action, support and resistance. I mean, if you're thinking of taking a buy trade there, you just need to look at the chart to see that price is moving downwards. Why would you buy against a downtrend? Instead, if you wanted to take the sell trades, because we're in a sell trend, you know, just wait for the crossover in or around the overbought zone. Again, confirm with the accumulation distribution indicator and price action, candlestick patterns, so on and so forth. Okay, so this stochastics example of one indicator. There are other indicators you can use. Okay, so that's an example of using the accumulation distribution for entering a downwards trend. Okay. So when it's low and around here, you might want to avoid trading if there's no obvious trend direction either. I mean, this market is choppy. You can see that clearly. You might not want to be taking trades there unless you're trading a ranging trading strategy. This indicator is perhaps not the best one for doing that. So let's look for a buying scenario here, uptrend. Okay, the accumulation distribution indicator is on his way up along with this particular uptrend here. Again, support level, uptrend, 1, 2, 3, and that's a really strong indication that we're in quite a substantial uptrend here. Okay, yes, this would have been the ideal entry point. No, you're not going to pick that every single time, buying at the bottom and selling at the top. As much as that would be ideal, if you did that every single time, chances are you're going to get taken in and out of trades. So instead, we wait for the trend to form. That forms here. Nice pullback. You can see our resistance level is built here. Nice pullback. This support level's holding up lovely, and the breakout there could have been a good. You can see here a strong accumulation distribution indicator signal there. And just to confirm the entry, and again, this is another good move. Currently could still be in this move. Over 400 pips again. Okay. Again, you can see price action showing bears are losing power here, and the bulls won, 3 candlesticks up there. Breakout of the resistance level, and you could have put your stop loss below this support here if you wanted, either side of the breakout, or just use the trend line, and it will give you security on your trade, which you can then, when it gets around here and you see the move starts to slow down, then you can always move your stop loss. Well, if you want to give the trade plenty of room, you can move it to break even. However, you could also lock in a good amount of profit around here, take some off the table, and just let the rest run. Just depends on you, your preferences, and your preferred money management. This is a 1 hour chart, as I said. You can use this indicator on any chart time frame. I find that it tends to be more reliable on the longer chart time frame, just because there's more price data included. It also means less time chart watching, which is great. And why fight for 10 pips, 20 pips here and there on the 5-minute, 50-minute chart when you can simply just catch a big move for a few hundred pips? Much less stressful. Let's go back to the stochastic oscillator. So as I was saying, we can look to buy when price is in or around the oversold zone, and there is a crossover above. In this instance, it happened here. This is quite not early on in the trade. As you can see, may not have been the ideal entry. However, if your stop loss was perhaps below the support, most recent support, you still would have been able to catch that move. But if we let the trend develop a bit more, you would have just come away from the resistance level as well, so it might not have been the ideal time to buy on that particular stochastics. Whereas over here you can see the crossover, still some momentum left in the trend. Price pulls back nicely to the trend line, which is probably, it's better to buy closer to the trend line rather than when price is already out here somewhere. So just wait for the pullback and have a nice continuation. Not to mention a good breakout again of resistance there. Okay, and then you can see here things are starting to slow down, so you might be considering the position if you haven't already taken advantage of this huge jump up and banked some nice profits. Okay, well, hopefully you've understood the accumulation distribution indicator. I'm not going to get into specifics of how it's calculated. I just feel like, in my opinion, it's not necessary to know that much detail if you're just going to use it to determine, just see it for what it is, just to determine the trend direction. You can go into more detail if you want. I do have an article which covers it in depth, but hopefully this visual explanation has given you some ideas of how you can implement it into your trading strategy. Just make sure to confirm all signals with, keep an eye on candlestick patterns, price action, support, resistance, other indicators, and as always, have good money management in place. Okay, please like and subscribe for more. Thank you for watching.